Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 11th, 2021. Folks always ask me, how should I invest during high inflation environment? This segment is to demystify how to invest during high inflation environment. So with that, let's jump in. So we'll look at market correlations, and also we'll look at what asset classes do well during high inflation, and then we'll look at what sectors do well, and finally we'll look at what stocks should I buy during high inflation environment. So with that, let's jump in and get started. So as you look here, these are the some powerful market correlations. As the inflation goes higher, typically asset classes like real estate, REIT, gold, silver, copper, steel, even energy at some times, consumer staples, healthcare, utilities, electricity, gas, heat. These are all the utilities here. And then few other asset classes like crypto, fine art, vintage, and so on and so forth. They tend to do well. Typically, these asset classes have got some pricing power. Even though it's a high inflation environment, you got to keep paying your mortgage and your rent. That's why some of these real estate stocks will do well. Gold and silver. Gold is typically very good inflation or very good hedge against inflation, tends to hold the price very well. And consumer staples, you got to go to grocery store to buy your consumer staples. That's why they got the pricing power there. Healthcare, when you're sick, you got to go to hospital. You can only delay it so much. And utilities, your gas, electricity, you got to pay month in and month out. If there is a high inflation, they will pass the price or a cost to consumers. That's why they got the pricing power. And some of these alternative investments, they tend to do well during the inflation here. And tips, short-term bonds, they also fare pretty well. And on the other hand, industrials, they tend to go a little bit lower. These are the cyclicals. They tend to go lower during the high inflation. Typically, they might have a high debt load and they have to pay more interest rate on it. And many times they cannot pass these high inflation and the price hike to consumers. That's why they tend to do a little bit not so great. And these high growth stocks, think about technology, cloud software, some of those high growth stocks will come down and money will rotate out of those into these asset classes in the top here, like healthcare, consumer staples, and so on and so forth. So that's what happens during the high inflation environment. And we'll look at some of these examples as we go forward. So let's jump in and look at few examples. First, let's look at a history from the past here. Typically, history is very good lesson here. It may not exactly repeat, but we can get some great lessons from the past. So with that, let's jump in and see what lessons we can learn from the past. As you look through here, we got here uh, we got 2023, 2022, so on and so forth. First two are really projections on the future here. As you look through here, we got 2020. In 2020, as you can see here, we got inflation a little bit higher, not too much, and Fed rate was pretty low, 0.25 basis points here. But in 2018 here, our friend Jerome Powell, he increased the rates pretty quickly. As you can see here, in 2017 it was 1.50, 2018 it was 2.50. That's a quick rate increase, and the stock market collapsed promptly in 2018. And as we look through here, we got 2007 here. This is the whole financial meltdown. All these big banks like all these big banks, Merrill Lynch and Lehman Brothers, they all collapsed here. That's a big meltdown there. And as you look through here, our favorite ETFs, S&P 500 did not so great in 2018. It was much lower. It's a little bit recovered as we go forward. During the high inflation environment here, as you can see, we got S&P 500 down. QQQ, which is a little more stronger, as you can see here, just down 1%. Dow Jones Industrial Average down 5%, and small cap Russell 2000 really dipped pretty badly here. So as you can see here, looks like SPY QQQ is pretty strong even during the inflation environment. It's got both high-tech stocks as well as biotech stocks that tends to fare well during this environment here. Then as you scan through here during the financial meltdown, as you can see here, all these asset classes did really badly. SPY, QQQ did big time down here, 41%, and DIA and IWM all down big time. And QQQ being the biggest loser here. And then you got dot com bubble, as you all know. As you look here during dot com bubble, you got Nasdaq, which took the brunt of the pain here. At this time, this Nasdaq was mainly tech heavy. All these internet names, you might be remembering them, CMGI and all this JDSU and so on and so forth. That kind of collapsed here. Look, bloodbath during the dot com era. So with that, as you can see here, IWM did kind of sort of okay, but still it's a big, big downturn. And then we look at few more asset classes here. Keep looking here. We got TLT, which is 20-year treasury here. That did pretty okay in 2018, as you can see here. Even though SPY did very badly, TLT did pretty much okay here. And then we got XLF financials did not do well during the high inflation environment. You would wonder, financials will get more interest rate from your money, but they did not do well. Utilities, on the other hand, think about all these utilities. They did very well because they can pass some of this inflation and high cost to consumers, so they tend to do very well here. Think about your electricity, gas, and so on and so forth. Gold, as you can see here, fared pretty okay here, not too bad. It kind of held on. And XLP, consumer staples here, it also did not do great back in 2018. And as you scan through here during 2007 here, during the dot-com bubble here, as you watch through here, gold held on here pretty nicely. Look, gold is up even though all these major asset classes are down here. TLT, our 20-year bond here, did superly well here during 2008 here during the financial meltdown. Only two standards here are really TLT, our bond here, as well as gold during this whole big financial meltdown. And then as you can scan through here, we got dot-com bubble here. During dot-com bubble also, as you can see here, financial did very well. XLU or the utilities did very well here, as well as consumer staples did very well. So that's a quick nutshell for you, so that way you know what asset classes tend to do very well during these meltdowns in the past. And then we'll go into other areas, some of the steady eddy type names here. We got XLV, healthcare sector here. Look, during 2018 here, healthcare also did not so great. As you can see here, it's also down 9.7%, even more than SPY, as you can see here. On the other hand, XLV did very well, 6.3%. XLV is typically a good barometer here. You could invest in XLV and some of these bigger healthcare names. Whereas biotech did not do well, as you can see here. XLY, consumer discretionary, did very well, not too bad at all. And as you can scan through here, we'll go into some more areas here. Look, we got IYT here. These are the big transportation type companies. I love transports. As you look here, transport did not do well during 2018 here. They came down pretty big. Even real estate also came down here, but it did better than S&P 500. As you can scan through here during financial meltdown, real estate also came down pretty badly. This was a subprime type issue here. That's why real estate got hit very badly. And as you scan through here during 2000 here, real estate did pretty okay in 2001, as you can see here. And then we'll go into China. You might wonder, hey, what about China? China also did poorly back in 2018 during high inflation environment. And as you can scan through here, during 2008, 2007 here, China also did pretty poorly. Came down pretty hard, as you can see here. And then, as you can look through here, we got COVID-19 during 2020 here. And as you can see, stock market did not do great, but they managed to go do a V turn here and did pretty much okay. Financials was a little bit down here, and real estate was a little bit down here overall because of this U type recovery and Fed's blessing here. I think we kind of came unscratched in 2020 here. And as you can scan through here, we got high interest rate environment in 2018 with the Jerome Powell increasing the rates pretty quickly. And during the Christmas and October, stock market collapsed. As you can scan through here, we have gold utilities doing well here, and we have XLV, which is healthcare, did very well here. XLY, consumer discretionary, also did very well. And gold did pretty okay, not too bad. And even QQ2 was also okay here. And then we got here 2008 subprime, bank collapse here. Look, only thing which did well was, maybe a couple of things here. One is gold. Gold did pretty much okay here. And TLT, which is bonds also did well here. And then finally, we got dot com. This is really Iraq War, as many of you remember. During the Iraq War, we got real estate, which did okay, but most of the other areas did not do well, as you can see here. And finally, during the dot com bubble here, we got XLF Financial did very well. Utilities also did very well. Consumer staples did nicely here, and most other asset classes were down, as you can see here. So that's a quick history from the past year, and a nutshell here. Takeaway from this here, we got gold, which is a good hedge against these type of sudden drop offs here, and utilities are also pretty good in that way. And then you got bond. Think about TLT and 7 to 10 year treasury bonds like IEF. They also did pretty okay, and even real estate at times they did very well. And consumer staples, XLP, as well as gold, they tend to do very well. So with that, now let's jump in and look at a few more correlations and go from there. And let's now look at what sector did well 2018 rate hike here. Most of you might remember 2018. We were all hoping for a Santa Claus rally during 2018, but our Christmas gift was really stock market tanking big time. I'm sure many of you might be remembering those painful days. So with that, as you can look through here, we got all the way from 2018 January to 2019 March here. Big news came in around October here. Our friend Jerome Powell saying, hey, you know what, we'll increase the rates. And they started increasing the rates. Stock market came down big time. Look, S&P 500 down 6% in October and 9% in December, just before Thanksgiving, Christmas here. And QQQ also rolled over promptly here, as you can see here. Big downturn in both SPY and QQQ here. And then if you look through here, we got XLV. XLV also came down nicely, as you can see here, around the similar lines of SPY here. It did not help investing in XLV during 2018 rate hike. Then as you look through here, we got TLT, which is bonds here. Bonds did very well. Even though stock market rolled over, bonds did very well in December, but they also came down a little bit during the October time frame here. And utilities, they did pretty okay, as you can see here. They came down, but not as much. Gold is a really shiny object here during this type of rate increase. Look here, gold went higher in December, and gold also went higher in October. That tells you gold can be a good hedge against this inflation here. You could slowly buy some gold and have it as a investment class in your portfolio. It may not give you great increase, but it's a good hedge against the inflation and sudden risk type environments where stock market collapses. And then you got consumer staples. As you can see here, in December, consumer staples came down pretty much along with the SPY along same lines here. But in October, they did very well. That tells you consumer staples can provide you some hedge. It may not be foolproof, but it does provide some good hedge here. And then we got few more here. You might wonder, hey, what about energy? I got Exxon Mobil, Chevron, and so on and so forth. Too bad, you're out of luck. Look here, we got XLE down during 2018 December here, and XLE energy cohorts down in October also. It even went even lower compared to SPY, as you can see here. And then you got technology here. You might wonder, hey, I have cloud stocks, I got software stocks. Look, they also came down, but they fared a little bit better, as you can see here. But it's along the same lines, similar to SPY and QQQ. They also did not so great. And then you got real estate. Real estate also came down, as you can see here, during the high inflation environment in December as well as in October. But they did not come down as much as S&P 500. So there is some protection in real estate. And finally, let's see, we got, as you look through here, look, we got 2018 December. What stands out here is bonds here, TLT, and gold. It also stands out here. Other area, XLU is pretty okay. It's not too bad compared to other areas. Those are the three areas. You got TLT, XLU, and GLD. Those seem to be the winner during this high inflation environment, and they did pretty okay. And next we got 2018 October. Again, big news from our Jerome Powell here. Look, even at that time, TLT was pretty okay, not too bad compared to SPY here. But XLU did nicely, and gold also did okay, and consumer staples also did very well. And real estate is not bad; it also did pretty okay. So, in a nutshell, we got our sectors here: TLT, XLU, Gold, XLP, even IYR. They tend to do a little better than these major indices during this high inflation type environment. And then we'll jump in and look at some stocks. You might wonder, hey, what about my Apple stock? I got some Nvidia. How about Nvidia? Let's look at how well they have done during this inflation hike in 2018. Let's jump in. As you look through here, we got all the way from 2018 January till 2019 March here. And look, we got huge news in December. Apple collapsed by 11%, as you can see here. J&J collapsed by 12%. And in October, look, Apple collapsed by 3% here. J&J went higher. So as you can see here, both are kind of sort of did similar things here. Both are not protection against inflation here. And then we got Nvidia. You might wonder, hey, what about Nvidia? Nvidia, as you can see here, it even did poorly than Apple here. It's down 18%. But gold is golden. It went higher by 6% when all the other asset classes came down. And then we got a few more here. You might wonder, hey, how about American Electric Power? It's a big utility. So utility, as you can see, it fared pretty well here. Even though Apple collapsed 11%, J&J collapsed 12%. Our American Electric Power held strong, just down 3%. It's a steady Eddie utility company. And then you got PG here, consumer staple. You got to buy your shampoo and wash your hair. This also did very well, as you can see here. And then you got American Electric Power, the REIT, Real Estate Investment Trust did very well. So that's a nutshell here. During these tough times when all these high tech stocks fall off, high growth stocks come down, like Apple, like Nvidia. Look, we got stronger names here, like gold here. A Barrick gold is a symbol for A Barrick Gold. That did pretty well, up. American Electric Power did well. Not, I mean, not as bad as SPY or Nvidia, and PG and AMT also fared pretty well. And during the October, look, Apple came down, J&J went up, and see, gold went higher. Gold goes higher in the face of bad news and uncertainty. That's why it's always a good hedge against these uncertain environments. And American Electric Power, PG, and AMT all did very nicely. And then, as you can see here, we just talked through here. The winners here are gold, American Electric Power, PG, as well as AMT here. Next, let's look at few more stocks here. You might wonder, hey, you know what? This is a handful of stocks. Give me some more. Let's look at few more stocks and wrap it up. So as you look through here, we look at Amazon.com. You might be a big buyer of Amazon.com. It's a consumer discretionary. As you see here, we got December rolled in. Amazon.com down by 11%. October came in, Amazon.com down by 20%. Oops, that's a huge decrease here. But look, we got energy here, Chevron, Steady Eddie here, just down 8% in December and also 8% in October. So did much better than Amazon.com during this high inflation environment. So in a nutshell, energy will fare a little bit better than these high tech stocks during this high inflation environment. And then we got here a few more. United Health. You might know this United Health as a health insurer, and they also did not do well when Amazon dropped by 11%. UNH also dropped by 11%, but back in October they did pretty okay. In a nutshell, it's doing a little bit better than high tech stocks during this huge inflation environment. But you might wonder, what about Marathon, my crypto stock? Crypto stock is a bloodbath, as you can see here. Probably, it was a little bit early days for crypto here, but overall, it's a bloodbath for crypto. Maybe it's something stock related, for Marathon Digital, but at that time did not do well, but it jumped up nicely later. And you might wonder, hey, what about JP Morgan? It's one of the best bank in the world. What about that? As you can see here, JP Morgan also dropped by 9% in December, and in October also it dropped by 4%. So it did a little bit better than high tech stocks here, but still dropped. And you might wonder, what about fintech? I got some Visa. Visa, I think it did much better compared to Amazon.com and the high tech stocks here, but still came down, as you can see here. But generally, Visa and some of the fintech names fare a little better, as you can see here. And then finally, you might wonder, hey, Warren Buffett, Berkshire Hathaway, should I buy some Berkshire Hathaway? Clearly, Berkshire is doing much better compared to Amazon.com and Apple. They came down, but not too much. I think it's always good to buy some Berkshire Hathaway. I think they tend to hold up pretty well during the uncertain times. And you might wonder, hey, insurers will do well. Look, we got biggest insurer here, AIG, American International Group. They did too bad here, down 22%, much. I mean, something similar to Amazon, even bad compared to Amazon here. And they also came down in December here. So, in a nutshell, even insurers like AIG did not fare well during the high inflation environment. And after all these things, you might ask me, hey, what should I do? And let's jump in here. And in a nutshell here, as you can see here, when we have a big inflation fear, as you can look through here, we got JP Morgan did pretty much okay. Visa was much better. Berkshire Hathaway was also okay here. Those are the areas like fintech does well. Insurers like Berkshire Hathaway, they also do very well. And something similar in October also, as you can see here, JP Morgan did well, Visa was okay, Berkshire is pretty much better than other stocks here. So with that, let's jump in here and do a quick conclusion. You might wonder, what should I do? And step number one, if you have some margin, get out. If you're in margin, things can get worse, because as stock market drops, you will get some margin calls and you have to sell good stocks to cover your margin, which is always not a good position to be in. And if you need money for next 6 months to 1 year, sell some shares, take some profit. It's okay. And it's okay to allocate some money towards gold, bond, like TLT and IEF, which is 7 to 10 year treasury bonds. They always provide some good hedge here. And you could also the gold itself provides some good hedge against inflation. And you could also buy some utilities, healthcare, consumer staples, think about Procter Gamble, Walmart, Costco, and some of those. They will also fare better here. In utilities, think about American Electric Power, and think about other utilities that we covered. I think the utilities will provide some good hedge here. Even AMT also works. And great strategy is to buy your favorite stocks like Apple, like Nvidia, like Amazon, and so on and so forth. As they go down, slowly buy them. They will provide you nice bounce back. The key is to not to go into margin, but have some money aside and buy them slowly as they go down. These great high tech stocks and healthcare names, they will provide you nice bounce back opportunities as they come down. Wait for a nice level and slowly jump in and slowly start buying. That's always a great strategy. As somebody says, all the strategies look good on the paper, but when you get hit, all the strategy will fly out. That's why it's always good to slowly buy some of your favorite stocks like Amazon, like Apple, Nvidia, AMD, and so on and so forth, as they come down slowly, because they will always come up nicely, even stronger. So with that, thank you very much. Happy investing and trading. Please subscribe.